Welcome back to the Baird Retirement Management Show. Joining us once again is Greg Ashcroft, who will be tackling another Financial Mythbusters segment. If you're on social media like I am, you've probably seen influencers taking their private jets to St. Bart's and claiming it as a tax write-off. As with most things on social media, this may not be what it seems. Greg, tell us how this works.
Yeah, so I definitely have come across a number of these videos, and it seems like these videos all have the same premise. There's a private jet involved. Sometimes the person doing the video is actually holding, for whatever reason, several stacks of cash, and they're wearing a gaudy wristwatch. And you start to think, wow, I feel like my life could be made immeasurably better if I could just find out where these people are getting these daggum tax write-offs. And it's like, do they sell these in the back of a Walmart? Like, where do I find tax write-offs? And I think the point of the podcast today is kind of demystify what it is that they mean by taking a tax write-off and some of the dangers or some of the errors that you could make if you decided that you wanted to get into the influencing business or start making YouTube videos or start a podcast and try to very aggressively expense some of these things that you see on social media. And I think the most common of which, perhaps not the most common of which, but luxury dinners are one that I've come across many times, or other expenses that are pretty out there, like flying your family on a private jet to some luxurious destination. So let's first get into what I think they mean by a write-off and what I think is received by people. What I think is received by people when they hear the term tax write-off is free. Is they see that they're using this private jet. They say, yeah, well, I expensed this private jet as a tax write-off, or I got a tax write-off for the use of the private jet. So whatever it cost them to either lease the jet, buy the jet, rent the jet, the fuel associated with the jet, all of that is under this really pretty guise of it being a write-off. What does that actually mean? A tax write-off does not mean that the expenses associated with using, in this case, a private jet were free. It means that this was going to be considered a cost of operating their business, and therefore they could expense it against the revenues produced by whatever endeavor they're involved with. So influencers, clearly, some of them make a lot of money, but most of them make basically no money. You can, if you're generating sufficient revenues, expense your legitimate business, costs against whatever it is the business is producing, so that you don't also have to pay taxes on those expenses. So ordinarily, this would be considered something like your cost of goods sold. If you're selling widgets and it costs you $8 to acquire them, and you can sell them for $10, you don't have to pay taxes on the full $10. You just have to pay taxes on the net. So too, on a very simplified example. But for those of us who want to get in on this tax write-off game, there are some things that we need to be aware of ahead of just jumping right into that. And the first of those is hobby income. So for most people, when they're doing side gigs, whatever your business might be, or whatever your side business might be, at first, the IRS is going to be considering that a hobby. And a hobby is an activity that is usually done for enjoyment or leisure rather than for financial gain, even if it occasionally brings in some income. Now, a hobby is not considered a business because it is not generally carried on to make a profit. And any income earned from a hobby must be reported on your 1040, and it is taxable. So that's some very sterile language, but the presumption that the IRS is going to have for businesses that occasionally produce some income and occasionally produce a profit is that those are actually hobbies. Those are not legitimate businesses. And so the double-edged sword of that means if you are occasionally producing revenue as a hobby, all of the income that you're producing is taxable and you must report it. But as you'll see here, the expenses are not always deductible. So if an expense related to the hobby exceeds the income generated, a taxpayer will have a loss from that activity. However, this loss cannot be deducted from other forms of income. What does that mean? It means if you are engaged in a hobby, even if that hobby occasionally produces a profit and you produce losses, so while you're engaged in that activity, you're spending more money than you make, you will have a loss, but the IRS will not allow you to use that loss to deduct other forms of income. So say you are a full-time accountant in this instance, and you're also running some kind of operation on the side, and in that year, that operation on the side produced a loss. You can't use that loss against your accounting income. You can't use that loss against any of your capital income. That loss is kind of frozen in amber until you have income associated with that hobby specifically against which you can later use those losses. So what determines whether or not you are in a legitimate business as opposed to just being in a hobby? The determination of whether an activity is being carried out for profit depends on individual circumstances, and it can be quite subjective. To provide some clarity, there's a section in the tax code, I won't bore you with the numbers, that offers a safe harbor provision stating that if certain criteria are met, the activity will be presumed as a for-profit endeavor. Under the IRS safe harbor test, an activity is presumed to be operated for profit if it generates a profit, not revenue, a profit, at least 3 out of the last 5 years, including the current tax year. The safe harbor is 2 out of the last 7 years for activities involving horse breeding or racing. Why that provision is written into our tax code mystifies me, but if you're in the business of horse breeding, and some people do get in that business, or horse racing, you've got to have turned a profit in 2 out of the last 7 years to be considered a legitimate business. Now, what does that mean for the ordinary person who is scrolling social media and come across a cash-holding dude flying in a private jet talking about how he's expensing this? That person is either making a video in order just to get the views, that seems most likely to me, or this person is engaged in a legitimate for-profit endeavor against which he is in which he's producing enough revenue to deduct these expenses associated with that business. And if you know anything about the cost of flying on a private jet, that means the business that he's engaged in has to be producing a lot of revenue, because flying on a private jet is not cheap. Now, from my perspective as a financial advisor, you see things like that, and yeah, they get a lot of clicks, they get a lot of views, they get a lot of interest, but it seems like a really bad or poor use of company assets, because that's at the end of the day what they are doing is they've established a legitimate for-profit endeavor. So this is a business at this point. And rather than using that business and rather than using the revenues from that business to reinvest in the business and do some more enterprising things, they've chosen instead to fly in a private jet. And now they're going to expense the costs associated with their business, and this is usually making videos or other content. And we're going to get into the specifics of travel and how it is that you actually can qualify, or how those expenses can actually qualify. They're doing this in the most gaudy and luxurious way possible rather than a more financially sound way, which is just traveling as normal people travel, going and doing your business, turning more profits as a business, and creating a more profitable enterprise on that particular trip. So on that note, let's get into some of the rules regarding whether or not a business/vacation trip actually qualifies as a legitimate business endeavor, and whether or not any of the expenses on that business can be deducted from the revenues produced on that trip. So unfortunately, there is no hard and fast rule about traveling within the United States. So if you see a person making a video, taking a private jet, and they're staying within the United States, those are going to have slightly different rules than trips taken outside of the United States. Why? No one knows. But this is reading directly from a tax planning textbook, just to give you a flavor of what it is that a sense of the flavor of what it is we're about to go through here. So it says, on a business trip to a resort area, you may also spend time vacationing. If the primary purpose of the trip is to transact business and the area is within the United States, you may deduct all of the cost of your transportation to and from the area, lodging and meal expenses. This seems to be where most of the influencers stop reading, because it says, if you are traveling within the United States, you can deduct your travel expenses, your meal expenses, and your lodging. So that kind of makes sense, right? You see the very luxurious travel arrangements, you see the luxurious hotel that they're staying in or the resort that they're staying at, and you see the very luxurious meals that they have on their trip. All the while they're telling you, this is all a tax write-off. This is all an expense of my business. But let's keep reading. And then it says, even if you do spend time vacationing, if the main purpose of the trip is personal, you may not deduct any part of your travel costs to and from the area. Okay? So it's saying, if the primary purpose of your trip is for your personal enjoyment, you cannot deduct any of the associated costs of that trip against your business income. That is the part that never gets revealed in these videos. That is the part they never want to talk about, that there are very intricate rules. And once the IRS gets into your business and starts closely examining some of these things, they never tell you what a headache that might be. They never tell you how much it's going to cost you to hire a tax attorney or go to small claims tax court or to hire a personal accountant in order to make sure that all of these deductions that you've taken on this luxurious trip are actually going to qualify. From my point of view, doing this kind of thing, posting it on the internet, getting a lot of clicks for having done so, is one of the fastest ways to invite the IRS into your living room and have them very scrupulously go over your personal tax return, your business returns, and for them to find any reason to make your life miserable. And so let's keep going on this. So the amount of time spent on business as opposed to sightseeing or personal visits is the most important issue in determining your primary purpose, okay? Regardless of the primary purpose of your trip, you are allowed to deduct expenses related to the business you transacted while in the area. What that's saying is, if you have very specific costs associated with transacting business in the area, you can deduct those expenses specifically, okay? That is not a general provision. It's not saying you flew to Hawaii to meet with a client, you did a business deal while you were there, but you and your family vacationed for 6 of the 7 days. This is saying on that one day, for the costs you incurred for that one specific transaction, that one specific business meeting, those expenses would be deductible, but not the rest of the trip. So don't let that language confuse you. Okay? And then the real issue here is if your trip is primarily for business, and while at the business destination you extend your stay for a few days for non-business purposes, you can only deduct the travel expenses to and from the actual business destination. So the language provided by the IRS, it does get pretty granular, but it's really still, there's a lot of room for interpretation about where is the line. Is there a bright line between vacationing with your family, particularly if you're an influencer in the business of making video content, versus you are engaged in a legitimate business enterprise? And so this is the caution that it's telling us. If your return is examined, this would be by an IRS agent. This is a place you don't want to find yourself. Proving the business purpose of your trip depends on presenting evidence to convince an examining agent that the trip, despite your vacationing, was planned primarily to transact business. Keep a log or a diary to substantiate your business activities. Again, that is never revealed in these videos. All they show you is the upside. You get to travel on a private jet. You get to go to some really wonderful location, and this is talking specifically in the United States, a beach trip, something like that, a ski trip. You see all of that. What you don't see is the later visit with an IRS agent where you're going to have to go through and air out your dirty laundry and say, well, no, on these days I spent this much time on my business, editing my videos, creating the video content, eating out with clients, whatever the case might be. You're going to have to keep a very detailed record of all of the various things that you did that were legitimate business endeavors while you are supposedly vacationing with your family, using your private jet, producing revenues from the videos that you make, and then taking all of these luxuries as write-offs, which really only allows you to do those things pre-tax. The rules, again, probably arbitrarily, are somewhat different if you are traveling to locations outside of the United States, okay? So this is going to it's going to vary slightly from the rules within the United States, but let's just read directly from the text. It says, if your travel expenses are otherwise deductible, expenses are allowed for a business trip abroad, even though you take time out to vacation. That sounds really promising. That's like what Hannah talked about, an influencer flying to some luxurious locale outside of the United States. It sounds like, hey, look, if my travel expenses are otherwise deductible, they kind of gloss over that. You can deduct these for trips outside of the United States. But it goes on. It says, provided you can prove, 1, the primary purpose of the trip was business, and 2, you did not have control over arranging the trip. That, again, is probably something that no one's even heard of, is if you planned this trip and you had full control over the plans to go outside the United States, you're already in a new category, and you might not be able to deduct any of the costs associated with this travel. But it goes on, because they do have slightly different rules for people who are self-employed, and most influencers or most of the people that you see posting these videos are at least ostensibly working for themselves, okay? So we can go on to, these are going to be rules for managing executives and self-employed persons. So if you're a self-employed person, you are treated as having control of arranging the trip, and your deduction for transportation costs to and from your business destination might be limited, okay? However, a full deduction for transportation costs are allowed if the trip outside the United States took a week or less, not counting the days you left the U.S., but counting the days you return, or not counting the day you left, but counting the day you return. If the trip abroad lasted more than a week and you spent less than 25% of your time, counting the days your trip began and ended, on vacation or other personal activities. So let's go over that again. It says, if your trip abroad lasted more than a week and you spent less than a quarter of your time there on vacation or personal activities. This, again, seems to always escape these videos. They fly to St. Bart's, as Hannah talked about. They show you the images of their family frolicking through the surf and having a wonderful time. However, they don't show you the other 75% time requirement, which was spent on legitimate business endeavors. So this would have been making the videos, editing the content, uploading the content. But again, this is a cold equation. This is not a, well, we spent some time on these videos, or we're going to edit them when we return to the United States for sure. I'm not actually going to do the editing while I'm there. Like, who wants to do that? That's a drag. But this is what the IRS is telling you. You must be engaged in order for any of these expenses to actually be deductible. They don't care if you filmed a bunch of content, and in order for 75% of your trip to be filmed content, they're not going to let it pass if you're like, this is just B-roll that you're never actually going to upload, or that you're not going to get any income from. So the primary purpose of your trip abroad, the requirements are even more stringent than if you stayed in the United States. And then lastly, and this is kind of funny because it's entirely subjective, the third thing is, if in planning the trip, this is if you're a self-employed individual like an influencer probably is, you did not place a major emphasis on taking a vacation. So here's what that's saying is 75% of your time spent in a foreign locale has to have been on a legitimate business endeavor, and in the preparation process, you can't even have emphasized the fact that this was a vacation. So the videos that you're making demonstrating you and your family flying on this private jet to St. Bart's, that would be at least, some solid evidence that would presuppose you had spent a considerable portion of your time planning this as a vacation for you and your family. Okay? So if the vacation and other personal activities took up 25% of more of your time on the trip, lasting more than 1 week, and you cannot prove that the vacation was just a minor consideration in the planning of the trip, you must allocate travel expenses between the time spent on business and that spent on personal affairs. So what that requires you do is you can go in and you can give a prorated share of the expenses you incurred on this trip to the time spent on legitimate business endeavors. Okay? So you're going to have to parse that out, figure out exactly how many hours or minutes you spent on legitimate business endeavors while you were on this vacation with your family, and how much of that time was actually personal. And again, you will have to prove, you're essentially going to have to prove a negative to the IRS in this case. You're going to have to prove that this wasn't a vacation. And that kind of violates the traditional, system of law that we operate under, which is you are innocent until you are proven guilty. Not so with administrative agencies. They're going to come to you. They're going to ask for these logs or these diaries of your trip so that you can prove to them that this was a legitimate business endeavor and not a vacation. Okay, so the rebuttable presumption here is not your innocence. It rather is that you took a phenomenal vacation with your family. You went and you made the mistake of posting on Instagram about it. And now you want to turn around and deduct the cost of the private jet and all the luxurious meals and all that against whatever revenues that were produced by your business. And the IRS, who they're the tax collector, they want their money. They're not going to look at this and be like, oh, well, yeah, best effort. No. this is a really fast way to get yourself in hot water with the IRS. So while the videos are fun or from my point of view, somewhat annoying, because as a financial advisor, you look at it and you think, one, it's an inefficient use of your money. And two, I don't think that they're telling you the whole story. They're not telling you the whole story. There's a lot more work that has to go into these things in order to actually deduct these expenses than meets the eye. And they're never really going to show you the kind of uglier side of this, which is a person alone in an office in Costa Rica diligently doing business so as to make sure that if they are audited by the IRS, they can prove, actually, this wasn't much of a vacation. I was parenting children while I was in Costa Rica and I was working the whole time. So that's never going to be a great Instagram video. It's never going to get all the clicks and views if we can kind of demystify what it is that these people are actually doing and how these tax write-offs actually work. And so for my money, it's probably in most instances, unless you are legitimately engaged in a real business that takes you to these parts of the world. And if you can take your family, great. If you can make that work, great. But I think these videos could be shortened down to, I had a legitimate business expense and now my business is less profitable for it because I was able to write these off for taxes, which, like I talked about before, all that means is you just weren't taxed on the money that you spent on the private jet or luxurious meals. It does not mean that you got a deduction associated with that or created a loss for your business that you could use for other tax purposes. It's crucial that people understand that. So I think for my money, that this kind of financial myth has been somewhat busted. Stay tuned for the next episode.
This broadcast contains the current opinions of the hosts and are subject to change. The broadcast is provided for informational purposes only and should not be considered investment advice or recommendations. Investors should obtain professional advice before making investment decisions. This is not a complete analysis of every material fact regarding any company, industry, or security. The information has been obtained from sources we consider to be reliable but cannot guarantee their accuracy. Robert W. Baird & Co. Incorporated is not a legal or tax services provider, and you are strongly encouraged to seek the advice of the appropriate professional advisors before taking any action. For more information about any companies discussed, please contact Baird. Past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. An investment cannot be made directly in an index. The broadcast may not be reproduced without express permission of Robert W. Baird & Co. Incorporated.